Hello, we are taking away from U.S. programming for a special interview with Alvaro Pereira, the acting chief economist of the OECD. Now, world economic growth is set to slow to 2.2% next year, down from 3.1% this year, according to the latest forecast from the Organization for Economic Cooperation and Development, that is the OECD. Despite significant headwinds, the OECD is not forecasting a global recession and says the right set of fiscal and monetary policies will increase the chances of recovery. Very pleased to bring in Alvaro Pereira, who is the acting chief economist. Thank you very much for joining us. Let's just start with the global outlook. You have global growth slowing to 2.2 percentage points next year, afterwards picking up to 2.7 percentage points in 2024. Not quite a global recession, but still a significant lower level of growth than we've witnessed the last couple of years. How would you describe the economic outlook at this point?
Well, thank you very much. Well, first of all, we are facing a very challenging environment. I think we have one of the most dramatic pictures we have in our outlook is exactly how much countries are spending in terms of energy as percentage of GDP. And you can see that right now we're spending close to the OECD countries 18% in energy as a percentage of GDP, which is as high as we've seen with the oil crisis in the 70s and 80s. So we're facing a very large energy shock right now, which is lowering growth at the same time that it's fueling inflation. Having said that, we do not forecast at this stage a recession. In fact, even in the major areas of the world, the United States, we expect growing about 0.5%. The same thing for the euro area. And so we think that, yes, risks have risen, that we might end up with more negative outcomes. But at this stage, we expect that we'll be able to have very low growth, but not a recession.
There is a line in the report saying that the OECD still does see downside risks. Where do those main downside risks emanate from, in your view?
Well, many of the downside risks are not surprisingly coming from the energy markets. We are particularly concerned what could happen not only this winter, but in particular next winter in Europe and Asia. If we have very cold winters, even though there's been a significant reduction in demand already for gas, we think that there could be still some gas disruptions, either this year or the next, if there is a very cold winter. On the other hand, we also know that wholesale prices for electricity and gas have been also much higher than retail prices. So it's very possible that retail prices could still go up. But then there's other risks associated with the natural rise in interest rates that is happening right now to fight inflation that will put additional burdens on families, especially families that have variable mortgage rates, and also for firms, because firms have high interest service costs going forward. But also, in addition, for countries. And in particular, we are fairly concerned about potential financial volatility for many low-income countries and emerging markets that have high debt burdens. And so we estimate that nearly 60% of all low-income countries right now are either under debt distress or very high risk of debt distress. And so obviously this is something that we need to monitor. But I would like to end up with a positive risk, which is if we are able to get to a just peace for Ukraine and the end of the conflict, this would certainly be a significant upside for the world economy going forward, boosting investor confidence and consumer confidence and lowering investment premium at the same time that, and more importantly, would end the human suffering that we see suffered by the people of Ukraine.
Of course, and the conditions need to be right in order for that to happen. Another line that caught my attention is you say that Asia will be the main engine of growth in 2023 and 2024, whereas Europe, North America, and South America will see very low growth. I'd like to unpack that more, especially because we spend a lot of time here looking at the growth engine that is China, which is facing numerous issues, especially over the last couple of months. We're seeing now a resurgence of the lockdown of COVID cases. It is being reflected in China's growth levels. And for so long, China has been the main engine of growth in Asia. how can it be the engine of growth for the rest of the world if China itself is still closed down?
Well, first of all, regarding China, it's certainly true that China has had the worst performance this year in terms of growth because of the strict COVID policy. And our central scenario sees China growing about 4.6% next year, but only to 4.1% in 2024. However, we highlight this very clearly in our assessment. If strict lockdowns continue and become more pervasive, this will dent growth in China, certainly. On the other hand, we are also fairly concerned if we have an adjustment in the real estate market or the housing market that is less smooth than we would like, and that we've seen so far. Is very possible this will also dent growth for China. So, you know, we have a central scenario in which China will start growing a bit more, but with significant risks. On the other hand, I would like to highlight that, remember, Asia is not only China. We have India that will grow fairly decently and very strongly in 24 by close to 7%. We also have Indonesia and dynamic Asia, in which countries like Vietnam that are growing fairly strongly, and we expect this will continue in 23 and 24.
Very fair. How would you describe the inflation outlook here? Investors have been focusing on the U.S. inflation situation. We had a CPI print come a couple of weeks ago, a bit lower than market expectations. We're beginning to see some goods price inflation start to fall. Do you think that this is the beginning of a sustained move lower?
We certainly believe that, first of all, central banks are doing what needs to be done right now. It's very important that since inflation became so pervasive and entrenched, it's very important that monetary policy continues to do its job going forward, not only in the United States, but other parts of the world. Before I talk about the United States, I would like to highlight one country that decided to go, that had very decisive action at the start of the inflationary pressures, which was Brazil. And their central bank acted very decisively when they start having these inflationary pressures. And now they're reaping the rewards because inflation is coming down fairly significantly in a sustainable way. The reading that we had in the United States, certainly the last one was fairly positive. It's only one data point, but certainly it's fairly positive. But we expect that not only in the United States, but other parts of the world, monetary policy, the decisiveness of monetary policy and the tightened monetary policy will start having more and more an impact. Our central forecast for inflation see that inflation should peak in many countries in the mid-half of next year or late of this year, but most of the countries will be mid-half of next year. And by end of next year, and particularly in 24, we start having inflation rates that are much closer to target. So I think there is a light, some light at the end of the tunnel, but we need not to let go regarding monetary policy tightening and fiscal policy working hand in hand also with monetary policy.
So there is a room to be optimistic about these inflation levels going forward, though it seems like it's going to take some time. One final question I want to ask you, because this again caught my attention with respect to how economies are faring versus pre-pandemic levels. And you say that for the OECD as a whole, the countries in aggregate have exceeded pre-pandemic levels by 3.7 percentage points. But there is one exception, that is the UK. The UK is still 0.4 percentage points lower than pre-pandemic level. What do you point that down to?
Well, our forecast for the UK, if we compare it what the OBR was or is forecasting, the magnitude of growth between 22 and 24 is almost the same. The profile of growth is a bit different. So they expect a bigger recession next year. We expect a bit shallower recession next year. But then they expect a bigger rebound in 24. And whereas we think that rebound is going to be a bit weaker. We think that this is happening mostly because of investment and because of consumption. And we expect that also that knowing that the UK faces a difficult fiscal situation. That's why we welcome what the government has done in the latest statement. We think that it's very important to maintain fiscal prudence at the same time that you're able to boost or try to introduce some sort of reforms to tackle some of the issues that has been plaguing the United Kingdom for a while, which is very low productivity. So we think that it's time for us to focus also on that besides monetary and fiscal policy.
All right, we're going to leave it there. Alvaro, thank you so much for joining me today. Alvaro Pereira, the acting chief economist from the OECD, talking through their latest economic outlook.